Hello everyone, welcome back to Amuda Academy. So today we are going to start with counting for share capital. So to understand this chapter, we need to understand the chapter name. So what is share capital? Correct. So what is share capital? Before understanding share capital, we need to understand what is share. So what is share? Let us understand by an example. Let us say you started a juice shop. So let us name it Juice Shop Private Limited. So this shop or this business requires around 20 lakhs capital. Correct. So 20 lakhs capital or investment. Right. So, but you don't have 20 lakh in your hand. So what you will do? So will anyone invest in your business? 20 lakhs, it is a big amount. No one will invest, correct? So what you did a thing. So you broke this 20 lakh into small equal parts. Let us say you broke into 20 small equal parts. So per part, each part, each part is 1 lakh rupees. Correct. You divided 20 lakh into 20 equal parts and per part is 1 lakh rupees. Now people can invest. Correct. So what you did, you went to your friends and said, I started a business and I require 20 lakhs of capital and I divided this 20 lakh into equal parts. Each part is rupees 1 lakh. So let us say Mr. A is one of your friend and invested or let us say bought 3 lakh, invested 3 lakh rupees, correct? Then Mr. B comes and he said he will invest 2 lakh, correct? So then Mr. C comes and he said that he will also invest around 4 lakh rupees, right? So now Mr. D, he comes and said, I will invest 1 lakh rupees. Total how much it became? 3 plus 2 plus 4 plus 1. It became 10 lakh rupees, which means Mr. A bought 3 parts, Mr. B bought 2 parts, C bought 4 parts, D bought 1 part. Correct. You divided the capital into 20 equal parts and each one of your friend bought 3 part, 2 part, 4 part and 1 part. So basically you collected 10 lakh rupees from your friends. Next, and you invested 10 lakh rupees from your end, which means 10 parts. Correct. So let me say all of your friends are sharing your investment. Correct. Correct. Sharing. And they are also part owner of your business. Correct. So if they are sharing, these parts are called shares. Right. They are sharing means shares. Correct. Three part, which means three shares. See. So three parts means three shares. Two part means two share, four share, one share. So did you understand what is share? So that is equal part, whichever out of capital we have divided small equal parts. Correct? That is called share. The small equal part is called share. Did you understand? And now your friends holding your shares, your company's share. So what we will call them? We call them shareholders. Shareholders. Correct. So if they are holding the shares, they are shareholders, obviously. So we understood what is share. Let us read once. So let me zoom it. Yeah, now it is visible. So what do you mean by share? A share is a unit of ownership in a company's capital. When a company's total capital is divided into small equal parts, each part is called a share. Did you understand this? Yes. So let us understand the same thing by another example. Let us take Tata. Let us take Tata. So sorry for that. Yeah. So let us say Tata company required 100 crore to start a business. Okay. So will anyone invest? Two people, three people can invest this amount. It is a huge amount. So two people, three people cannot invest. So the company did one thing, divided this 100 crore into small equal parts. Let us say it divided it into 10 lakh equal parts. That is 10 lakh shares. Equal parts means shares. So each each part, that is each share at rupees 1000, correct? At rupees 1000, and then the company came to public, like you and me, and told that we are starting a business and the capital is 100 crore rupees, and even you can invest. And we divided that 100 crore into 10 lakh shares. Each share is 1000 rupees. You can buy how much ever you want. Even one share you can buy. You can invest even 1000 rupees. Correct? So public, it came to public and said this. And let us say Mr. A, your friend only, bought 1 lakh share at 1000 rupees. Correct. Mr. B bought another 3 lakh shares, and Mr. C bought another 4 lakh, and Mr. D bought another 2 lakh. Correct. 2 lakh shares. By this, 10 lakh shares sold to your friends. Right. They raised capital of 100 crore. So this is shares. Let us understand what do you mean by share capital. So share capital means whatever capital you raised from your friends and by investing yourself, correct? You also invested 10 lakh here. Total 20 lakh you collected by issuing shares, correct? So this 20 lakh is called as share capital. Whatever you collected from public, it is called share capital, total amount. So let us read the meaning once. So what do you mean by share capital? Share capital is the total money. So 20 lakhs in your case in juice shop, correct? In Tata Capital, it is 100. Tata company, it is 100 crores. Whatever money you collected by issuing shares or total money a company receives by issuing shares to its owners or investors. Correct. Let us read it once again. Share capital is the total money a company receives by issuing shares to its owners or investors. Who are the owners? Who buys the share? They are the owners. They are the shareholders. So did you understand what do you mean by share capital? So now share capital has various types. Let us see that first. So, categories or types of share capital. The first thing is authorized share capital. So, what do you mean by authorized capital? Let us read once and then we'll understand. Authorized capital is the maximum amount of share capital that a company is allowed to rise by issuing shares as mentioned in its memorandum of association. So you'll ask, what do you mean by memorandum of association or MOA? Correct. So memorandum of association is nothing but a document, which is a document which consists name of the company, address of the company, share capital of the company, and etc. It will have various informations regarding company. So here in share capital, if we mentioned it as 100 crore company, which means to run a business or our business, we require 100 crores. Correct. So if it is mentioned in the MOA, that is Memorandum of Association, that is the maximum capital a company can raise from the public by issuing shares. So this is the maximum limit, which means this is the authorized capital. Authorized capital. Correct. Authorized capital means which is the maximum amount you can raise from the public by issuing shares. So that is authorized capital. So did you understand that? So MOA means it is a document where name, address, and share capital of the company. These things will be mentioned in that document. So right. So the second type is issued share capital. So let us take the Tata company's example itself. So Tata company required 100 crores, correct? Out of it, out of it, 100 crores, how many shares it divided into 10 lakh shares. So the company required only 50 crore rupees right now, correct? So that is 5 lakh shares. So 5 lakh shares. Company came to you, that is public, and said that we required 50 crore and we divided it into 5 lakh shares you can buy right now. Correct? So what the company told to public, you can buy up to 5 lakh shares. So this is called issued capital. This is called issued capital. Out of authorized capital of 100 crores, that is authorized capital, the company issued to public to buy, which is 5 lakh shares, that is 50 crores. So this is called issued share capital. Let us read it once. So issued share capital is the part of authorized capital. It is the part of authorized capital that a company actually offers to investors or the public for buy. So this is the meaning of issued share capital. So let us see subscribed share capital. What do you mean by subscribed share capital? Let us understand by Tata example itself. So the company issued how much shares? That is 5 lakh shares worth of 50 crore at 1000 rupees each. Correct. So let us say public showed interest or bought the shares worth of only 40 crore, worth of only 40 crores. That is 4 lakh shares. Correct. Out of 5 lakh, whatever issued by the company, people bought only 4 lakh shares. This is called subscribed capital. This is called subscribed capital. Right. People showed interest to buy only 4 lakhs. Right. So this is called subscribed capital. Let us read it once. So subscribed capital is the part of issued capital. In our case, in Tata company, they issued 5 lakh shares that investors actually agree to buy. In our case, public bought only 4 lakh. So this is subscribed capital. Correct? This is subscribed capital. So our subscribed capital has three types. So it may be fully subscribed or it may be undersubscribed or it may be oversubscribed. Three types. Let us understand this. So, what was the options? Fully subscribed, under subscription, over subscription. Correct. So, let us say in our case, people bought only 4 lakh shares out of 5 lakh. Correct. Issued is 5 lakh. Let us say issued is 5 lakh and people showed interest or bought the shares worth 5 lakh only. So that is fully subscribed. Next thing, under subscription means 5 lakh shares issued by company. People bought only 4 lakh shares as I explained here. That is under subscription. Over subscription means 5 lakh shares issued, 6 lakh shares bought by people. So this is over subscription. So how it can happen under subscription, over subscription, right? Let us understand that also. So first thing, now it is not happening. It was practiced previously. So now, if they said per share 1,000, you should pay entire money right now. But previously it used to be like EMI basis. Let us say company issued for 1,000 rupees, correct? 5 lakh shares they issued, correct? At each share 1,000 rupees. You can pay this 1,000 rupees on EMI basis. Company said we don't require 1,000 rupees at a time. We will collect it as EMI. Let us say first EMI they collected 250 rupees. At the second installment, they collected 300 rupees. Third installment, they collected again 250 rupees. And the fourth installment, remaining 200 rupees, they collected. So like this, they will collect. Correct. So here, the catch is how it can be under subscription, over subscription. Correct. That is the point. So whenever a company, a big company like Tata company issues shares, you and me will buy a lot of shares, correct? So if they offer at 1,000 rupees, we may buy 50 shares, 100 shares, or 1,000 shares also. So people will apply continuously. There will be no control over it. We can receive application for 6 lakh shares also, right? So people, let us say people applied 6 lakhs shares, correct? So how they can apply? So it doesn't have any control, anything, correct? Even they can apply for 10 lakh shares also, correct? So, so the company said, along with your application for share, you need to send certain amount to confirm, correct? So then only fake buyings won't be there. So 250 rupees is the first installment, whatever the company is collecting, it is collecting along with application. So this is called as application money, correct? This is called as application money. So then the second thing, they collected application money. They need to allot you the shares, correct? Whatever you applied for. This second EMI, second portion of amount is collected for or to allot the shares. This is called allotment money, right? Remaining everything, whatever EMIs are there, that will be called as calls. That will be called as calls. So first, after these two, first whatever comes, it will be called as first call. Whatever the second is there, it will be second call. If it is the last EMI, if it is the last EMI, we call it as second and final call. If it is fifth EMI, we'll call it as third and final call. So, did you understand this process? Correct. So, like this only oversubscription, under subscription may happen. If people apply along with application money, if people, let us say, along with 250 rupees, they sent 6 lakhs application. We won't have any control over it. So, right. So, if they don't need, they can reject the 1 lakh share extra. Whatever extra shares they have applied, the company can reject it. So, this is the basic concept. So, let us see another type. Let us see another type here. Fourth one is called up capital. Called up capital. What do you mean by called up capital? Let us read it once, then we'll understand. Called up capital is the portion of subscribed capital. Is the portion of subscribed capital that the company has asked or called shareholders to pay. Shareholders to pay. In in our example, let us say here 250 is application money. Let me write it clearly. 250 rupees application money and 300 is for allotment. 250 again first call and 200 rupees second and final call. Right. This was the example. Let us say the company collected these two application money with application they will collect obviously. At the time of allotment, they collected 300 rupees. After that, still company didn't ask these two installments, which means this is called up. Whatever you paid to the company, that will be called up. The remaining two will be uncalled. The remaining two will be uncalled. If the company asked you to pay amount, that is called. If the company didn't ask you to pay, that is uncalled. Right? Did you understand these both? Let us see the next type. Paid up capital. Let us read it once. What do you mean by paid up capital? So, paid up capital is the amount. Let me zoom it. Paid up capital is the amount of money actually received by the company from shareholders out of the called up capital. Right. Whatever money received by the company when they call it. So let us say in our example itself. So these two already called up and then again they called this first call to pay. Let us say 20,000 people hold the shares. Correct. So out of it, 18,000 people paid the call money. So whatever third installment is there, 18,000 people paid. So if they pay, this will be paid up capital. So this will be paid up capital. So remaining 2000, what we will call it as? It is unpaid capital, right? 2000 people didn't pay. 18,000 people paid. This is paid up capital. And this is unpaid, obviously. This is the basic meaning. So let us understand the last one. Last one I already explained uncalled capital here only. If they call to pay you, then it is called up capital. If they didn't ask, it is uncalled. That's it. So this is the end of this basic meanings of this chapter. So let us meet in the next video with a pure accounting problem. So let us solve the problem in the next video. So thank you for watching. We'll meet in the next video.